This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good afternoon, everybody. It's 11:15, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating this session. If you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Let's get a quick new crop price update here, post report. We got December corn down a penny and 3/4 right now at 4.25 1/4. November soybeans are up 1.5 at 10.26 1/4. And December Chicago wheat is down 3 at 5.60 is the last. Looking at the acreage numbers really quick here, corn 95.2, March was 95.326, so just a little bit lower than March. Beans 83.4. March numbers were 83.495, so a little lower there as well. And then on the all wheat side, 45.5. That's a little higher than the March number, 45.350. On the stock side, this is kind of where it got a little bit interesting. Corn, 4.64. That was against the average estimate was about 4.6. So they were looking for that number. March numbers were 4.997. And on the bean side, 1.007. March was 970, and the average estimate was looking for a number closer to 980. So I'd say kind of the only number that really shied away from the estimate was on the bean stocks number. So anyway, guys, now that we've had a few minutes to take a look, Justin, I mean, by all accounts, a pretty disappointing report if you were looking for something to change here, because it's kind of been a dud so far.
Yeah, I mean, I think the fear was, what if we find a bunch of corn stocks? That didn't happen. We didn't get corn deliveries like we talked about this morning. So I think trying to press corn on these numbers, we've traded all this. I mean, we traded much worse case scenarios than this. We lost a little bit of acreage for both. Probably the beans, 30 million bushels bigger than the guess for stocks. ADM delivered beans like we talked about this morning. So that kind of makes sense. But we're going to quickly move past this and look at weather. In my opinion, there's nothing in these numbers that makes me want to go get aggressively short either commodity, and I think it's all weather now. So got it past us. We'll see how we close the day. They're hammering corn spreads, which I think is really odd. The July SEP is up, but their SEP forward is all heavy bear spreading right now. I think that could be end of the month type stuff. So we'll see. I think it's kind of friendly in the fact that we didn't get a big stocks number for corn, so kind of got past that hurdle, and it makes the weather that much more important. So kind
of interesting to see, Justin. I mean, where did so we saw a drawdown in corn acres, which I think some people were looking for actually potentially for those to go up. And did that come in the way of cotton, or where was that? Where did they find those?
Yeah, and actually sorghum was down a few 100,000 acres. Cotton was higher. So all just kind of small, tweaks here and there. But, combined corn and bean acres are just down a smidge. So, I kind of put that in the positive category, honestly, from what we could have gotten. So we'll see. We'll see. I think first notice day is still intact, and we'll see what the attitude is as we, start a new quarter going into 4th of July weekend. Like I said, the weather models aren't spectacular by any means. Some like the GFS, which hasn't historically been as reliable, has kind of the most rain of any of the ones. But if you look at the European, the ensembles, some of those other ones are kind of dry and hot forecast. But like I said, that it's weather, right? So that could change tomorrow. We'll see how much they want to try to pound corn going into the quarter and get a paycheck, for being short. But I think that's going to be a tough one to make a real big leg lower from here. I think you're going to have really good weather, and we still have a lot of growing season left. So it kind of feels like we've already traded, like we're kind of ending the summer. So Thank God that's behind us. And we're just kind of getting now to where it's important. So,
yeah. Dustin, what's on your mind?
Yeah, I think that was the big question with why, July collapsed to every other month for the last couple months. At one point, 40 over July SEP, and, to go back toward a carry. Everyone thought that maybe something would show up in this report. The fact that it's still indicative of a 1,365 carryout at the end of this year, this type of a stocks number. Justin said it perfectly. It does go back down to now the onus is on weather to prove the crop. Yes, we have plenty of corn acres, but we're talking about like 2 billion bushel carryouts. We're at a 1,365 projection. We're good 600 million bushels off of what a bear market would be. And so now if we go and have some sort of trend line yield increase, yes, it can still be a bear market, but 600 million bushels is kind of hard to make up when there's no leeway coming into the season. So I am a little surprised, like Justin said. I think the odd thing is the spreading right now. Like, what was the indication from this report that you wanted to see the front end take the biggest hit? So it could just be positioning that time of year. I agree the first note stays intact. I also think that we still have to prove a pretty good sized bean yield at that type of a carryout and this type of an acreage. We're already seeing some demand rationing in the WASD estimates from what the Feb Outlook forum was calling for, because we're sub 300 million bushels, and that's usually an area where we need rationing. But with great RVO guidance, I think it's an interesting spot to be at the counter seasonal lows, especially for corn going into the rest of the summer.
Oh, very good. We just one of our frequent followers here, James Costello, he asks, so with these numbers, I think I know where he's going. So at this stocks number and, say status quo weather, what do we feel like the pricing environment looks like? Obviously bad weather, could make all bets off. And then are there any other outliers that you guys see outside? We've talked about a number of times. You got trade things going on, geopolitics going on, things like that. But I guess any other thoughts, guys, with the number we know today that shapes how we progress here or going into harvest?
Yeah, I'll take, my opinion is, we've taken a lot of risk. We've taken a lot of premium out of the market already. We've already traded really big acres. I think we're trading really big yields. So yeah, if the weather, is really good, the rest of the growing season will be lower than today's price, most likely. But that's going to take some time. You've got to get through pollination. You've got to get grain fill. You've got to get, like I said, we're just now getting into where the weather matters. So, I think obviously if the weather turns bad, I mean, with the positioning of the market, with the, funds being aggressively short, spreads being wide, I think there could be some, I think Ben said it this morning, some air gaps above the market. If my crop looked really good, I think looking at July corn, July 26th, if you got up to 485, 490, those areas, I'd probably be a seller of that on a, 30, 35 cent rally. But yeah, it's all weather, right? So it's kind of a tough question. If the weather's really good, yeah, I think we'll probably be lower at harvest. But like I said, we've taken out so much of that risk premium that we've already traded some really big numbers. And so I think you have to get those numbers to actually come to fruition to get the next round of farmer selling. That's why kind of this first notice day in this time of year is interesting, because you're cleaning up a lot of old crop stocks. And then I don't think the appetite is going to be there to be aggressively selling corn for a while at these levels.
Yeah, and I wanted to add to that too, because I think one of the things that I think about is the dollar is the lowest since 2022. And you think about where's the biggest pain point for U.S. growers? It's not 350 corn, in my opinion, because we set the insurance price at 470. Many people, even at an 85% policy, will be deep into a payment at 350 corn. Let alone the fact that 95% policies should have probably been extremely popular this year because of the increased subsidy. And then look what they're doing farm bill. They're talking about, increasing the farm bill coverage. Well, that already is going to be substantial at 350 as it stands today. So like there's two forms of payment, crop insurance and farm bill, let alone any sales that have occurred up to this point in time. I think the average corn producer does better at 350 corn than it does at 410 corn. So that's a natural force for the market to not get that cheap, in my opinion. You look at many of these years where you're into double payment territory and it doesn't hold because there's just not a bunch of willing sellers, whether that's conscious or subconscious. I look, in my personal opinion, trying to solve for the biggest pain point. That's going to be right around where we settled last year, 418 corn. I wouldn't be surprised that it's there under good conditions, because that's going to be the least amount of crop insurance payments, least amount of farm bill payments. It's right where growers are not really heavy sellers until they have to either.
Yeah. And, adding to that too, like, one of my, not fears, but I think one of the worst case scenarios would have been to like lose $1 million, like $1 million, $1.5 million corn and gain it in beans, because then both balance sheets kind of look a little burdensome. And so, beans, I mean, the thing is, if you get into a hot spell and you have some kind of a fear, it doesn't take a lot of imagination to make beans look like you need to go into rationing mode, especially with really good crush margins. And this 45Z and some of these things that we're getting more and more guidance every day on. So yeah, I think it wouldn't take much to get a good rally personally. Now, I think you have to be really disciplined. If you have a really good insurance policy, like a 95% policy, just remember why you bought those so that you can aggressively market against it. And so I think, if you do get that opportunity and you get a good rally, like I don't want to forget that we do have a really big safrinha corn crop that we're going to have to contend with, so if you get let's call it a 30, 50 cent rally, you do have to shave some demand off, the corn numbers probably, because we'll lose some export business. So kind of have to be open-minded there and just realize like, okay, if we do have a big rally, you have to be willing to sell into it. And it could be a quick, if you come in 4th of July weekend and they've kept kind of the rain out of the forecast and it stays hot, it wouldn't surprise me to have, a pretty quick, 30-cent rally personally. Just got to be prepared for what you're going to do if that does happen, what that means. And I think with spreads being super wide, that's why I picked the July 26 in my example. Looking on our farm, that's probably what we'll be selling, is that kind of 490 area, because you have wide spreads. If you have storage, like, most of those 95%, well, not most of them, all the 95% policies of big crop insurance policies all off the December, right? So if you can earn 35 cents carry, selling on the back end might not be a bad idea on a quick spike.
Any other thoughts, guys, or comments before we wrap the bonus? Ben, something on your mind?
I just, I think that today, we've had this big break in corn, and there's got to be more corn. There's got to be another 250 million bushels out there. That's the only way you can explain this. Or we've got to have 97 million acres and all these things. And today we found out that neither of those things are true. So we head into looking at growing. I'd give it a little bit of room into the next week or two and see what it wants to do. So.
Very good. Well, guys, those good comments. Appreciate that. We'll see how we close here today. One thing to note, we will get crop progress conditions here, 3:00 Central. So we'll take a look at those, talk about them in our evening commentaries, and then certainly visit about it on the War Room tomorrow morning. Let's get a quick rundown one more time of the markets here. New crop corn Dees is down a penny and a half, 4.25 November beans are now up a penny and a quarter at 10.26, and December Chicago wheat's down 3 at 5.60. We appreciate everybody that tunes in on a daily basis. We appreciate all the thoughts and comments there. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing it live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Again, thanks, guys, for the bonus edition here today. And hope everybody has a great day. And we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.